guys, it's Terry the Realtor and welcome back to my channel. Today I'm going to be discussing the financial aspects of being a homeowner as well as some of the things you should look for and think about when you're in the process of buying a home. So if you're interested in this topic, please keep watching. One of the first things that I recommend that people do if they're in the very beginning stages of the home buying process is consulting with a lender. Now, if you don't already have one, this is one of the good things about working with a realtor very early on is because they can direct you to one. So the benefits of working with a lender very early on in the process is because they can get you pre-qualified and even pre-approved for a loan. There is a difference between being pre-qualified for a loan and being pre-approved. It's the same thing as when you get credit card companies sending you offers saying, hey, we've pre-qualified you for a $2,000 credit card. And then you call or you go online and you apply and you may or may not be approved for it. Or if you are approved for the credit card, it's not for the $200 limit that you thought. It might be for $1,000 or something else. So that's kind of the similar situation when it becomes the difference between being pre-qualified and being pre-approved for a mortgage loan. So you want to really focus more so on that pre-approval. Once you get a pre-approval for a loan, they will give you your maximum that you will be able to get a mortgage on. Now let's say that maximum is $250,000. For most people, including myself, $250,000 sounds like a lot of money, and it is kind of a scary number to work with. So I know a lot of people are like, well, I don't want to spend $250,000 on a house. I'd rather spend maybe $200 or $180. I want to stick between the $180 and $200,000 range. And that's fine. That's not a problem. But one thing I strongly recommend people doing is speaking with their lender who's pre-approved them for that number and determining what is that monthly mortgage cost going to be. So it's really important to have the lender break down the numbers because you'd be surprised that there's not much of a difference between you spending $200 or into $225. It could be literally a couple $100 difference between $10,000 and $15,000 difference in the price of the home. So you really want to crunch the numbers and figure out a monthly mortgage cost that you are comfortable with paying before you decide to say, nope, my max budget is $200,000, even though you've been approved for up to $250,000. With that being said, one of the things that I also strongly recommend people doing is going over a monthly budget. Now, yes, your expenses will probably be more once you decide to buy a home because there are extra added expenses that you typically don't pay as a renter. However, a lot of times people don't even think about that. You're thinking, okay, I pay currently $900 for rent. And even though, I make maybe 3 or 4 times that much, I can afford to pay $1,200 a month for a mortgage. And that might be true. But you also have to think about your utilities are going to be more expensive. You're going to have to pay taxes. You're going to have to pay insurance. You're going to have to pay all these different costs that you don't have to pay as a renter. So you want to budget those costs. Now, once again, that's the good thing about working with a realtor and working with a lender because they'll be able to explain more, especially because certain things are going to be different depending upon your area. So they'll be able to explain all of those added costs that comes with being a homeowner. I really want everybody to be able to own a piece of the pie. I want everyone to be able to be a homeowner. But I don't want people to be house poor. It's amazing to own a fabulous home with fabulous furniture and having everything you ever wanted in your home. But what good is it to have this great house if you can't do anything else? You can't even afford to have a dinner party in your fabulous house with your fabulous dining room furniture that you got from Z Gallery because you spent all your money in your house and furnishing your house. That's pointless. You want to be able to enjoy your home and still enjoy your life. You still have to live your life once you buy your home. So don't be so quick to spend all of your extra income on being a homeowner. You still want to live within your means. You still want to be able to have vacations and go on special events and extracurricular activities for your kids. You still want to be able to do all of those things because you still have to live a life. And home ownership, once again, home ownership is great, but it's not so great if you have to sacrifice everything you have just to be a homeowner. So earlier I mentioned that there are some costs that are associated with being a homeowner that you wouldn't necessarily have to have as a renter. Some of those costs include HOA fees. If you're in a place like Phoenix, Arizona, where almost every house is within a planned community, you will be paying an HOA fee most likely. And your realtor or the sales consultant within the new home builder will be able to give you the exact cost. Sometimes the HOA fees you have to pay monthly, quarterly, or even yearly. So it just depends on the neighborhood and the builder and the association that's within that community. Another cost that you would have to probably consider is a home warranty. Sometimes you can get a home warranty included within the home if it's a new home. Sometimes the sellers include a home warranty, and sometimes it's you would buy one on your own. It just depends on the certain situation. Home warranties are great because they can help you out when things break down, like your refrigerator or your washer and dryer, or things that wouldn't necessarily be covered under your homeowner's insurance. Home warranties are fantastic. And if you don't know of a good home warranty company, that's another reason why you should have a realtor, because they're going to help you find one. And lastly, we're going to discuss unexpected costs. This is something that might not be that easy to budget for each month because depending upon the circumstances, the cost will vary. But it is something that you really want to consider because as a homeowner, you're not going to be able to call the landlord or the leasing agent and say, hey, you know, my toilet's leaking, or the lights aren't working in a room and I already flicked my breaker box. Those are something that you're going to be responsible for as a homeowner. And so it's really good to be able to determine what you're going to do in those circumstances. Either are you going to be saving money every month for those extra unexpected costs, or are you going to keep a credit card away, tucked somewhere that you don't use on a regular basis to be able to cover those costs. Even though those types of things can be very expensive, these are realistic costs that are associated with being a homeowner. And so you want to be able to think about everything, not just getting the home and knowing how much your mortgage is going to be. You need to know when things get rough, how are you going to be able to fix it financially. So that's all for today. I hope you learned a little bit more information about what it's like financially to be a homeowner. If you have any questions, comments, or topics that you would like to see on this channel, please leave a comment below in the comment section. I will also leave my social media links as well as my contact information in the description box. Thank you all for watching, and I'll see you in my next video. Bye!